Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 18th of April. In terms of fundamental economic data, we got initial jobless claims and continuing jobless claims, and both came more or less as expected, 212 and 1812, more or less as the consensus one. But the key data, I think, was the Philly Fed new orders that came higher than the previous one. But look at these prices paid. 23 coming from 3.70. Apart from that, the big data also existing home sales. Remember that the Fed is expecting the home sector to cool down, prices to go down, and demand to slow down. So this month over month of minus 4.3 and home sales of 4.19, as expected, 4.2 million. I think it's a check in the right direction. But Fed Bostic, Bowman, William, a lot of Fed talking today, and right now at 11, Fed Bostic started saying that inflation is too high and the pathway to 2% inflation will be slower than people expect. It's going slow, but at least it's going where they want to go. We have to be patient. He doesn't have a recession in the outlook, but we won't be able to reduce rates until towards the end of this year. And I think that's part of the key why this is a miss. And starting at 11, the markets went pretty much downwards, as I think the sentiment continues being of higher for longer. Look at these yields. Everything is in the green. Interest rate futures coming up, yields, dollar in the green, yields, the 2-year yield it's at 5%, and the 10-year yield it's at 4.64. And dollar is also super bullish. Interest rates futures are showing up that no interest rates even in September. So Bostic it's putting the final nail in the coffin. And as we can see in the Nasdaq, we try to go higher after taking this liquidity on the 1 hour. Remember that we had still some business to go down here. We took this liquidity and we are coming towards 17,500. And on the S&Ps, we are towards 5,000. I think that's really key after the series of lower highs in this trend lower. Today I was really expecting a little bit of bounce. We got that after the initial sell-off. We got that, but then at 11, right here, Bostic just smashed the market down. And we are right up to basically to where we kind of bounced. We are now trying to build some structure, and on the Nasdaq we are still on the daily fair value gap. So I mean, there's just selling pressure everywhere. Look at these candles, one big candle, another red big candle, another one today minus 0.60. Meta is outperforming the rest of the Nasdaq, but Microsoft minus 1.40, Apple minus 0.76, Tesla minus 3%, Amazon minus 1%. Small caps were pushing today, but then again, Bostic just smashed the market down with the outlook of basically interest rate cut perhaps at the end of the year. So we came from 3 interest rates to 2 to 1 or perhaps none. And this is quite important because interest rate futures are showing this is the September one. We are at all-time highs after the September of last year at 4.5.1. We are again at these levels. So this is the higher for longer that most economists are really feeling the pain and are really scared of. 5%, 5.2 in September, it's really just a market destroyer. And the only thing that can save this market is really good earnings. Netflix is going to report earnings after the close today. Let's see what happens with that. Next week, Tesla, and the upcoming weeks, the big Magnificent Seven. But I think the sentiment is quite bad. The only thing that can save this market is stellar earnings. And I really doubt we are going to deliver on that. So what can we do? The same as yesterday. We just have to wait for big levels to be hit and to really see how it affects the price action. In this case, my level for Nasdaq is 17,500. And until then, there's a little bit of liquidity down here at 450, and the S&P's is just 5,018. It has a little bit of ways to go down here. So we tried to go higher, we failed, we just reversed it, and we are not trying to. This looks pretty bearish, and the Feds continue changing the narrative, and markets are adjusting. So there's no more than that. We really have to be patient because tomorrow it's options expirations. Tomorrow, big put wall on the S&Ps at 500, at 5,000, sorry. So I think today is just we tried, but the Fed keep pushing the narrative of basically what they have been saying since weeks. Higher for longer. They need to see home sector going down, labor market going down, prices going down, CPI going down. So until that changes, the market will adjust, and it's obviously adjusting on the yields, on the interest rate futures, on the Nasdaq, on the equities, on the stocks. That's all. I think we have to continue to be patient to see what Netflix can deliver after the close. And let's see tomorrow in options expirations. Really difficult day tomorrow, Friday. Be really careful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. The trading day is not over yet, but we are quite reversing a little bit of bullish sentiment after the open, trying to go higher, but that got smacked down. And the war between Israel and Iran is coming up. So there's uncertainty everywhere. And when we are in this kind of situation, we have to sit tight, wait, and see. Stay safe, everyone, and see you tomorrow.